awesome. Just awesome.
At least it was a nice day. I didn't have to drive and walk in the rain.
Yes, that's nice. When you actually leave the building.
Give it a couple more minutes, or?
Sure. But
Okay.
if you sit here, then Veronica can actually hear and see you.
Oh, is that right? Okay, that's what
Yeah.
you want me to say. Okay.
Yes, if you don't
Okay,
mind.
yeah, I can do that.
Because then
No problem.
we got her pin, so she'll show up here when she's. Oh, there she is.
Okay, all right.
And she's big enough to see, but not a giantess. So that's
Awesome.
and when you're ready, you can open your and hit record.
Okay,
It'll announce that you're
then I'm ready.
recording. Yeah, that's
I'll
right.
let the world know
That's right.
we are ready.
And Emily, just as a quick thought, order is a little delayed, so you may want to shuffle the questions just a little bit.
Yep.
Cool.
All right, well, everybody, we were going to give it a couple more minutes, but instead we gave it 1 minute. 1 minute, but we're going to go ahead and get started. So thank you all for being here. I'm Emily Greger, President and CEO of the San Leandro Chamber of Commerce, and this is Small Business Week 2022. The City of San Leandro is one of our partners, so I want to thank you to the City of San Leandro for being partnering this. I also want to thank Jessica Prado and Diana Elliott, staff at the San Leandro Chamber, for helping us with all of the arrangements today and all of the marketing and such. I want to remind you that we have more workshops throughout the rest of the week. So, where are we? Are we on Wednesday? We're on Wednesday. So we have two tomorrow and one on Friday. So just check sanleandrochamber.com, go to the events calendar and see the other events, and hopefully you'll join us for one of them. I also want to remind everybody that for those who are attending the workshops, you will be entered into a grand prize raffle, which is a team building experience at the 90s. The 90s is an immersive, nostalgic experience kind of museum at Jack London Square, kind of like what it was like to grow up in the 90s. And so they have offered a team building experience for you and your staff. And that'll be the grand prize raffle on Friday. And we'll have a couple of other raffles that day too, so you want to make sure and join us on Friday. In the meantime, I am going to welcome all of you to Access to Capital. When we reached out to our membership and to those interested in small business workshops, we asked, what do you guys need? They said, we need new customers, we need to figure out how to get visibility in the community, and we need money. How do we get money? So we have today with us a couple of folks. We have Veronica is with us, right? And I forgot to. There we go.
Yes, I'm here.
Recording in progress.
Okay, so there's Veronica. She is with us. And also with us is Penny. Penny, what is your last name? Carton.
Yeah.
And then we have Porter, who is joining us, and he's a little bit late. But they represent a couple different organizations. One is the U.S. Department of Commerce Minority Business Development Agency and Centro Community Partners. So we're going to be talking about different grants that are available, some 0% loans that are available. And so at this point, I'm going to turn it over to Penny, have you introduce yourself and the organization you represent.
Okay, thank you very much. Hello, Veronica on the other side. So I'm Penny Garton. I work for CDC Small Business Finance. We are the nation's largest small business lender when it comes to the SBA Community Advantage Program. We also do micro lending, and you've probably heard out there in the business world, CDFI and CDC. That's what I do. I do those types of loans. I am based in Central Valley. I cover all of Northern California, and I not only work for a nonprofit lender, but I've also been doing commercial lending for 34 years, and I'm also a SCORE volunteer, so I'm kind of full circle. And that is me in a nutshell.
Wonderful, thank you. And Veronica, if you'd like to introduce yourself and your organization?
Sure. So my name is Veronica Gutierrez. I'm the Capital Access Manager at Centro, And Centro is a nonprofit based in the Bay Area that provides education and support to entrepreneurs. And also we are partnership with Kiva, and Kiva is a crowdfunding platform that offers 0% interest loan up to $15,000. And basically we help entrepreneurs and small business owners to create their application, prepare all the process through the fundraising, and also prepare the strategy to get funding, because Kiva is just the point to start with the process if they are looking for a bigger amount.
Well, thank you both for being here. So I've got some questions that I'm gonna just ask, and I believe we've worked out a little bit about who might be the best person to answer them, but you guys can kind of decide that, okay?
Okay.
I'll start with the first one. So one of the questions is free money. What about free money? Is there free money? Do you expect more grants to be available? We've seen a lot of grants available throughout the pandemic and such. Do you see more of that coming out in the next couple of years?
Okay, so I'll try to fill that. Porter, who's on his way, was going to fill that question. But what I can tell you is with grants predominantly 99.9% of them are for nonprofit organizations. For profit, there are some that will come out and they're specific to specific industries only. During COVID, you saw PPP and special lines off of where you don't have to pay back those loans. As opposed to the EIDL loan, the EIDL loan, you do pay that back. Will we see grants for the for-profit business like we have in the past 2 years? We will not. We will not see that. So if you're industry specific, or you're a nonprofit, or you're looking to start your nonprofit, you can definitely go to grants.gov, and that will direct you to the different grants that are currently available, and keep checking those because they update daily for new grants.
Is that a website that's always available? I mean, regardless of whether we were
Yep.
in COVID or
Always
not?
been there. It's always been there.
Okay.
COVID has really opened the lending world, business owners to the lending world for them, whether it's for-profit, nonprofit, government financing, or traditional.
Okay.
Yeah, but grants.gov is where you can go.
And Veronica, if you don't have any of that, I might be able to answer a little bit for Porter when he's not here. Okay.
Yes, I just wanted to share a link in the chat, and this is something that one organization, Hello Alice, is collecting during the pandemic. They create a portal where you can find different sources of capital. They are collecting frequently all the grants that are available for small businesses or for women. So you can check on this website and create your own portfolio, because one of the things that I wanted to share is, in my experience, one of the misconceptions behind to apply to a grant is that because it's free money, not necessarily you need to present all the documentation. But you need to be prepared, you need to be ready. So it doesn't matter if you are applying for a loan or for a grant, you need to collect all the documentation and prepare your strategy to get funding. So that's one of my main recommendations. Always be ready, and it doesn't matter the source of the capital, you need to prepare in advance the process.
Can you guys pull her site back up? Because that Hello Alice is a very good site. So in case anybody else wanted to write that
Oh my
down.
goodness, where is that?
Up to
Yeah,
chat.
she put it in the chat box.
There we go. With that.
There you go.
And actually, Porter will probably talk a little bit about a new grant that's coming out from Alameda County, which is for less than $15,000. They're generally, as Penny pointed out, they're getting narrower and narrower because they're focusing in on certain groups. And this is definitely set up for small businesses as opposed to larger businesses. I encourage you, if you're interested in keeping an eye out for grants, to contact FDBC or SCORE or one of the other entrepreneurship assistance organizations, because they keep their ear really big for that kind of thing. That said, increasingly we're going to have less and less of that kind of grant money available because all of the sort of large costs of money are being drawn. And it may be better for you to give up the hope of being able to get someone else to pay for everything and just recognize that you need to borrow the money in order to achieve something. Sorry, you may want to return to that with
Yeah,
Porter later.
yeah, absolutely.
Yeah,
Because
definitely.
he has a detail.
I'll have them expand on it.
Yes.
Yes.
Especially with the local fund.
And so my next question is, what are some good reasons to finance business growth rather than build up a reserve? Who wants to take that?
Okay, I'll start. So a lot of folks will say, well, I have the money, I'm gonna pay for it. I'm gonna buy a new piece of equipment, I'm gonna pay for it. I saved up. How much liquidity in your business are you gonna have left after you pay for it? That's the biggest question. Do you have the reserves after you pay for that piece of equipment? So if the piece of equipment is $100,000 and you have $120,000 in your business checking account, is that $20,000 going to keep you going for the next 90 days, maybe check your receivable term days? If it is not, that is where you want to look at financing that piece of equipment or that expansion or adding on to the lease, whatever it might be. You need to weigh those options. And basically what you're gonna do is you're gonna take your income statement, you're gonna see what your monthly expenses are, and a good rule of thumb is 3 to 6 months. Keep that reserve 3 to 6 months. If you have that and you have more, you're good. If not, reach out to borrow the monies.
Veronica, do you have anything to add to that?
And just a quick comment is about the questions that you need to ask before to start the process, and is, for example, will your company need funding now or within the next year, and how that plan looks like. Or the other question is, how much money will your company need? So if you have the capacity or the ability to answer those questions, maybe you are ready for the next step for your business.
And so what other cautions are there for financing growth? I mean, just making sure that you've got enough reserves for 6 months, but any other thing that you might want to expand upon? What else is going to be cautionary to do that?
Well, you always want to look at the cost of the expansion. Also location. If the location you're in right now is very viable and profitable and you're going into another area and you're not as familiar with that area as you are where you're currently at, I always suggest that you do the drive-bys, and I call them the drive-by and sit. So wherever you're looking to go into as your expansion location, don't go there just at night. Go there in the morning, go there in the afternoon, go there at, any certain times of day to see what kind of foot traffic am I seeing. A lot of times folks will go, oh, it's a great location because there are a lot of businesses. Okay, well that's great, but do you also need that nighttime traffic to help keep that location sustainable on its own? So that's why we say, do the drive-by and sit. And as lenders, sometimes we will do that. If we're not familiar with an area, we will go and check out that area. So that is one thing cautionary. Make sure. And then you're gonna do projections more than likely unless your business can currently sustain additional debt if you're needing to borrow. So your projections are gonna help you plan accordingly. And keep in mind, you're gonna have a ramp up period there. So when you do your projections, you're gonna base it on a ramp up, not what you're currently doing at location 1. Location 2 is gonna have a ramp up. Normally it's 90 days is what we're seeing. And just be, as you went through starting your business, ask the same questions for location 2, always. Okay?
So when you go into getting funding, does location A help the financial picture, or do you just look at location B when you're trying to get new funding for a new location?
So we look at both. We look at both. Location 1 has to be able to sustain its own debt. Okay? Has to be able to sustain its own debt. Location 2, now we know locations 1 monies that it has built up is gonna help open location 2, right? Okay, so location 2's projections, meaning the people walking in and out of the door paying for the services or goods, that location should be able to sustain that debt that it's acquiring, not location 1. So each location must be able to sustain on its own.
And so you, as a lender, you'll be looking at both. You'll
Yep,
be
we
looking
look
at
at both.
the full financial picture.
Yes, we look at both.
Okay. Veronica, do you have anything to add to that?
Yes, and the other thing is how well prepared you are to start the process, because you need to understand that good funding for high quality lender doesn't happen quickly. So you need to prepare a plan, all the things that Penny mentioned, and you need to understand what's the next step, know your numbers, because that can reduce the back and forth with any lender. Because if you have enough information about your business, your projections, the impact of this investment on your business, you will be ready to have that conversation with a lender. So it is very important to understand your numbers, the impact that can have that loan in your business. And if you are aware about your numbers, that can be very easy, the conversation with any lender, because for example, Kiva is a crowdfunding platform, and you need to be ready to ask for money to your own community and show your business and present your business with your community. And that can be a good fit, a good source of capital, but you need to be aware about that impact, or if you are ready to ask for money. So it is very important to be ready, but overall understand the source of capital that you are applying for, and the impact that this investment can have in your business.
And just to kind of piggyback on what Veronica said regarding knowing your numbers, please do your own projections. Don't hire somebody to do them. Because believe it or not, that has happened, and I have shot deals back saying, Mr. Business Owner, Mrs. Business Owner, you need to do these yourself. Because like Veronica was saying, you need to speak to your numbers. You can't, if I ask you a question, you can't go, well, let me ask the person who did my numbers for me. Right then and there, I've shot your deal down. It doesn't go any further.
You want to know that they're confident in everything that
Yep.
they're bringing forward, and they're
Yep.
knowledgeable of it.
Yeah.
Otherwise, they can, yeah.
Yeah. It's the same thing as walking into a location and you ask somebody, how much do you pay for XYZ each month? And they go, I don't know. That's a sign right there you don't know your numbers. And those are things that as lenders, regardless if you're the banks or the nonprofits or, you know, like Kiva, any of those, we ask those questions for a reason, because we want to know you know your business. So, yes, be prepared to know your numbers.
Okay, so this next question is got a lot. Let me get through it, and then you can answer, okay? So, what top 2 things do you feel a small business needs to do to prepare to get funded? Get their financial house in order, understand their growth plan, understand the cost of funds, develop a good credit rating, establish a banking relationship, create relationships with their existing customers. Which are the 2 things that you feel they need to know really well and be prepared for?
Mine are definitely in the top 2. The get your financial house in order. How many of you do your financials on QuickBooks or have a bookkeeper that does them, or you do them yourself monthly? Okay. And you have it done by the 10th of every month, right? Give or take? Okay.
15?
Yeah. Here's the reason why I ask. As lenders, once we roll past the 10th of the month, we're asking for last month's interim statement. An interim statement is your profit loss balance statement, receivables and payables, okay? Once it rolls past the 10th, we're asking for them. So, you wanna make sure you have those done every month. It's like top of number 1, you know, the first, second, third day of the month. You wanna make sure you've got those done, because if you're coming to myself or Veronica or even Porter, who will be here, we're gonna ask for those.
So let me get this straight. If they've got to be done by the 10th, And if they're not, then you're looking, so if it's the 10th of May, now you're asking for May to be included.
No, we're asking for April 30th.
April 30th.
Yes.
Okay, all right.
So your previous month should always be done at least by the 10th of the following month.
Okay.
Okay, there's a reason for that, because as lenders, financials cannot be more than 90 days. Most of the processes for business financing, term loan lending, will take anywhere from 30 to 45, sometimes 60 days. So if we roll into that and you give me February, I can't close because your financial's too old. Okay? So that's why we say have your financials ready to go. Have them done, have them ready. Same thing with your year end. A lot of folks don't get those done until February. That's fine, except don't come to me until March because your fiscal year end won't be done until February. Okay, don't come to me in January. In January, we're gonna go, okay, give us, January through November. But your fiscal year end, not your final tax return, but your fiscal year end, which if your fiscal year is January to December, so January 1 to December 31st, profit loss balance, receivables and payables need to be supplied. And we always recommend to use some form of accounting software, because if every month or every week you're plugging in, all you have to do is go to your software and type in what you want, and there it is. And that's pretty simple and easy. So your financials are number one, that's definitely. And then the understand your growth plan and expenses. We kind of touched that just a little bit ago about if you are expanding your business plan and your projections, those, have those ready, be ready to speak to those. And there is help out there for you to do those. Don't want you all to think that just here it is and go. There are several sources out there to help you with those. And I'm sure Veronica, her company probably has a business technical team just like my company does. And then you can also reach out to the SBDC, they are local, and also SCORE, they are local. And you can request to have some folks help you. And those are volunteers. We're volunteers for those organizations. So you have actual folks that are in either that direct industry working with you or have done, like I get a lot of requests to help folks with their projections, obviously.
And Veronica, what about you? What are the top two things that you would tell a small business owner to be ready for?
For us, since we are a technical assistance provider, for us is keep your business plan up to date. It doesn't matter if you have 5 years or 7 years of experience with your business, you need to keep your business plan up to date, because that business plan will contain all the aspects that just Penny mentioned. Your financials, the organization, the operation, the marketing strategy, all the topics that any lender will ask, and you need to demonstrate that you are ready and you have enough experience in your industry. So it is very important to have your business plan up to date, because this methodology or instrument will allow you to organize your business in different levels. And even to recognize if you are loan ready or you are not loan ready. So it is very important. Take a look and organize the information of your business into a business plan. And as Penny mentioned, there is a lot of organizations that are providing this support for free. And the SBDC is one of the partners that we have, and multiple organizations that are ready to help entrepreneurs. But the most important thing is ask for help, because if we don't ask for help, it is very hard to know what are your needs. So we are here to support entrepreneurs in any way that we can, and if we don't have the expertise, because we are not expert in everything, we can refer you and connect you with other organizations. So, for example, at Centro, we developed a business planning app. You can download the app, and through the app, you can navigate through different resources, lenders, technical assistance providers, if you need legal assistance. So there is a lot of organizations ready to support you, but as I said before, you need to ask for help. and discover what type of needs do you have as well.
So I have a question. So do either of you find, okay, so people go into business, they get started, all of a sudden they find themselves, you know, with a very lucrative business. I know Raphael has a great business and he just keeps getting busy. What if he doesn't have a business plan? Do you guys see that often with people already in business and they don't have a business plan?
We do. And depending on how long they've been in business, if it's been over a year, we technically, for our company, CDC Small Business Finance, we don't ask for a business plan, but we will ask for a synopsis of the expansion. So not the full-blown business plan, but a synopsis. Tell me what the plan is. You know, location, management, marketing, all of that. Because you already have your vendors. You're just moving your vendors over, you know, or adding. So we ask for the synopsis just so we know it's not, oh, we're gonna open a second location and I just want $100,000.
Right.
And
So for the chamber, we represent businesses that are already in business, already up and going. But they can certainly, you know, if you don't have a business plan, call SCORE. SCORE can certainly help you with the business plan, right? Because
Yes.
you might need it. If you're looking for lending, you need to have this plan in place.
Yeah, definitely so. And there are templates on the SCORE side as well. I don't know if the chamber is connected to where they can click.
I think so.
I think most of them do, where you can click on it, and then there's a search bar, and you can just type in business plan, and the template will come right up along with the workshop that you can just view at any time, because they record their workshops.
But is it the same thing? When you take the same like projection, you need to do it yourself, because I know there are companies that pay the business for you.
Yes, same thing. So if you hire a company to do your business plan, and you sent it to me, and I asked you on page 3, are you gonna be able to tell me what's on page 2? Probably not, so that's why we ask. Yeah. You know, a lot of people look at it and they feel overwhelmed, just like Veronica was saying. Ask for the help. That is what most of us lenders that are the nonprofit lenders, we're geared to do that as well. Sometimes I help my clients directly because I have the time. When I don't have the time, that's when I send them to our business advisor team, and that's all they do all day long is they talk to my customers, getting them ready for me to submit to underwriting. So I'm working on the file while they're helping them fine tune their business plan or their projections. And it's the same thing with SCORE and SEBC. You get assigned a one-on-one mentor to work with you on. So you're still doing it yourself, you just have a coach helping you. Yeah. But you gotta ask for the help, just like Veronica said, you gotta ask for the help, and it's out there. There's so much out there for help.
And so Veronica, what can you say? How does your company help prepare borrowers to come and lend from you all?
Yes, so we have 3 points to start. Our main focus is through programs because we are running programs in different locations. Our programs are free, and we have 3 levels of programs. The first one is a boot camp that will take 6 hours, and in that boot camp you can develop an initial draft of your business plan. And it doesn't matter if you are in an early stage or if you already are in business. And the second area is the basic entrepreneurship program. This is a 9-week program, and through that program you can develop with more clarity your business plan and address specific challenges. And the third program that we have is the advanced program, and this is for businesses that are already in operation and, for example, have a specific project in mind. For example, open a second location, or they want to launch a new website, that type of things that you need the time to organize the different tasks. Because one of the things that we always observe working with entrepreneurs is that they never have the time or enough time to organize the tasks through the business. So our plan through the different programs is connect entrepreneurs with specific activities. You create your goal and you achieve the goal through the program. So that's the main the main activities that we encourage entrepreneurs. And all these programs are hosted by one-on-ones and business advisors, and these business advisors can walk you through the goals and the different activities that you have in mind. We work with different type of entrepreneurs, nonprofits as well, but it is very important to see the commitment of the entrepreneurs with the process, but overall with the business, because we know that the entrepreneurs have all the information in their head, but they need to put all that information on paper and have the ability to communicate all the ideas that they have. So you need to take the time, and it doesn't matter how much time are you working in your business, you need the time to organize all your thoughts and put that action plan in concrete steps.
Well, you know, we were kind of chuckling when you said ask for help, because we heard from the SBA this morning, and the woman who was our presenter said, you know, entrepreneurs don't ask for help. You guys are very independent. You want to start your business. You want to do what you want to do. You just want to go for it. They're like, there's so many people out there to help you and so many resources. You just have to ask for the help because it's out there. So, yes. Let's see here. So I believe it's Penny. I believe this question is specifically for Penny. Talk a little bit about your 504 program.
Okay.
And any other sort of related funding that goes along with that.
Okay, so the SBA 504 loan, some of you may have heard about, it is specifically for real estate, whether it is buying a building or doing ground-up construction. The SBA 504 loan is 2 loans. You will work with a bank or your bank. I always recommend going to your business bank first and go to your business relationship manager. If you don't have one yet, get one established. Go to your branch manager, tell them I need a business relationship manager, okay? So the 504 loan is 2 loans. The first half will be a standard commercial loan. That's why I say you want to go to your bank. And that half is 50% of the purchase price or the overall project cost. So if you're doing a ground-up construction, and it's $1 million to do ground-up construction, your first will be 50% of $500,000. Okay, that's the first. The second loan, which will be a second on the building, is the SBA 504 portion. That is the portion that SBA will work on and do, and they will do 40% of the purchase price of overall project cost. So that on $1 million would be $400,000. That means you, as the borrower, come in with 10%, whether it is ground-up construction or a purchase. Okay? And I looked right before I came this morning because I have historical rates. Rates are back where they were pre-COVID. Okay? And I hate to say it, but I got, as I was writing it on BART, crime has just gone up again to 4%. So in the last hour and a half. Okay, so crime has moved. That means the treasury rates have moved, which is what a lot of these rates are based on. Okay, but again, rates are back to where they were pre-COVID. So you're gonna start seeing commercial rates in the high 5s and the 6s, so don't be shocked when you hear that. So, you're going to work with 2 lenders basically at the same time with the 504 program. And again, it can be used for real estate only or large scale equipment. And I'm talking large scale where it's normally affixed to the foundation of the property. Okay, so those can be combined. The 2, the lender and the 504, the CDC company will work together. I recommend doing this. As a CDC lender myself, I normally collect the package from the client. I make a copy set or make a copy PDF and send it to your bank. That way you don't have to do it twice. So make sure you ask whomever you work with at the CDC if they can do that too for you to save you some time. Okay, because it's the same file. Only difference is you're going to have a different application, one from the bank, one from the CDC. That's it. And your personal financial statement, I recommend doing off the CDC. process is the same, the two will work together. Once it's approved on both sides, it is a joint closing, everything is done all at once. The difference is you're gonna be making 2 payments, okay? 2 payments for the one building. One thing I recommend asking is what is your bank's, first, what is their prepayment penalty? Because it can vary between 3 years, 5 years, 10 years, or what we call the yield maintenance, which is the life of the loan. Okay, so ask what the prepay is. On the second, the 504, it's a 10-year prepay, and it's a descending percentage of the balance, the principal balance.
So that's the one SBA loan that does have a prepayment
Yes.
penalty? Because somebody asked that this morning, I was told SBAs don't have prepayment penalties, but then somebody said they did.
They
but
do.
It's particular products.
Well,
Or maybe it's just this one, I don't know.
so this product has a prepayment penalty, and the SBA 7A has a prepayment penalty, which can also be done through your bank or a lender. And that is one loan. And they'll do up to 90% financing. And that is one loan that you can combine everything. So if you are ground up construction or buying a building, and you need to also do furniture, fixtures, equipment, any kind of equipment, maybe you need a forklift, anything like that, that is the only loan through SBA that you can do everything compiled, including working capital. It's the SBA 7A. That has a 3-year prepayment penalty. So again, it depends.
So the 504 is just for real estate
Just for real
Just
estate
for
and
real estate.
large scale equipment.
and large scale equipment.
Yeah.
And then the SBA 7A, you can do anything.
You can do anything. You can do a startup, you can do a business acquisition, and then you can do equipment, working capital, operating capital. You can buy out your partners on the 7A. Okay, so it has a lot of variables in the 7A.
For
Okay,
the 504, what is the prepayment penalty?
that one's 10 years. On the 504 SBA portion only. That's why I say on the first, the standard commercial part, you'll want to ask your bank who's doing what is prepay. Now, before you even sign anything on going forward, you should get a structure letter of interest from your lender. It is going to give you all that information. Okay? We all issue those. And I came out of a large global bank before I came to the nonprofit CDC, so.
It's a structured letter of information.
Right, and it's called a letter of intent, or a letter of interest, excuse me. It's like the letter of intent you get from your landlord when you're gonna lease a building. They're both called LOIs. One's a letter of intent for a lease, and one's a letter of interest from a lender.
At what point do you get that? Before you start this whole process, so you can know
Yes.
all the ins and outs of it? So you want to ask for that prior, so you
Yep.
can know the full story
Yep,
while you're getting all your paperwork
Yes.
together?
yeah.
Okay.
Yeah, normally I issue mine before we go into underwriting, so when I pre-qualify my files, I send that. To tell you, based on what you have provided me, here's a pre-qual letter, I've ran your credit, I've ran your business credit, I've run a small minor background, and I can pre-qualify it before I've gone into underwriting. But I have issued you a letter of interest saying, here's my structure going into underwriting. Okay?
So what's the advantage of choosing 504 instead of 7A?
Right, so I'm gonna give you a couple different answers on that, because I've been doing those programs for a very long time. If you talk to your CPA and you're just buying a building or a large scale piece of equipment, they're gonna tell you to go on the 504. The reason is, when you blend the two rates, it's cheaper than the 7A. Okay? When you blend them, it is cheaper than the 7A. And I would always tell my clients that when I was at the Global Bank. Your terms are the same between the two. The difference between them is going to be 504, you're making 2 payments. 7A, you're making 1 payment. But if you're having to buy a building, equipment, find out your part, you can do it all on that one. Literally, you can do it all on one.
So you really need to go to task and figure out, what do I need money for? Do I need money just for this one thing, or do I need money for the whole?
Right. And a good loan officer will have that discussion with you, or relationship manager, okay? They will sit you down, and don't expect to be in and out there in just like 15, 30 minutes. It's going the time I'm on Zoom or on the phone is easily an hour, hour and a half, because we're talking through everything. So they're prepared, you're prepared. I want you to be prepared before you start gathering and sending everything to me. And I want you to be overwhelmed, but I want you to be informed. So, and then your prepays are the difference too. The 504 has a 10-year, and you don't know what the first is going to be, because that's the bank commercial loan. And those are the 3 different ones I told you that it could be. And then the 7A has the 3-year prepay. But if you have a CPA, go to them and ask them, and they'll run the number and tell you what the blend is. You can kind of do it yourself if you go to bankrate.com. And there is, I think it's under, there's a commercial button on there, and you can actually do it. I found it one day because somebody asked me, does this really work? Is this how you do it? And it's pretty darn close. And it's off like a few decimals, but if you want to know what your blended rate between your first and your second, you can go there and figure it out.
So everybody, Peter Wong has joined us. That's okay. He's with the Minority Business Development Agency, correct?
Yes, correct.
And so, Peter, tell us a little bit about what that agency is, what it does.
Okay, first of all, I need to say sorry. I totally, miscalculate, estimate the time I need to get here from Mountain View. I budget an hour and 15 minutes and end up it's almost 2 hours. Sorry about that. Please accept my apology. So MBDA is a government, basically a federal government agency. Is under the U.S. Department of Commerce. So we basically do 3 things. One is to assist small business to access to capital. And then the second thing is to access to contract. Could be like, mostly it would be government contract or let's say Caltrain or BARC, or State of California. And then we also provide business consulting. So let's say, in this case, let's say somebody wants to, have let's say want to apply for a bank loan, so maybe I will refer you to Jenny. Yeah. Or maybe, some other banks, and depends on, what your needs are. And then, so basically we work with minority-owned, majority-owned, minority-owned business, right? So it needs to be like 51% or above. And the requirement is usually the business needs to be in operating for at least 3 years, and $1 million road revenue. Sometimes we might waive that if you not quite hit $1 million, you are like, let's say 700,000, 800,000, we will start in. And so basically that's what we do.
And the technical advising that the state is doing, are you discussing that too?
Oh yeah. We also actually work with a lot of the State of California programs. For example, right, both we're involved in the currently there's 2 grants from the State of California ongoing. One is the California Micro Business COVID-19 Relief Grant. So that one is for business that they are in operation before 2019 December 31st. And the gross income not to exceed 50,000, and then you have less than less than 5 full-time employees. Now for that one is kind of a little bit different. I know a lot of people quite familiar with the California relief grant, small business relief grant. This one is called micro business, so it's like for micro business. So for the California small business relief grants, business can get like anywhere from $5,000 to $25,000, depending on your business size, your revenues. And then it's all, when you apply, it all goes to one place. So basically, it's the lender street. There could be a lot of like different technical centers that help you, help you through the application process. But then you actually apply, through the portal of lender street, which is a CDFI based in Los Angeles, minority-owned bank. So you go to one place and then you do all your things. Now for this micro business grant, the difference is that the state of California, based on the population of each county, and then they calculate the amount of money for a small business for that county, and then they basically distribute the fund to the county, and then it's up to the county to actually administer the whole application process. So then there's a few things, like a couple of things. Like one, the application windows are all different. Like let's say Alameda County actually is about to accept application in May 17th, start, and then I think it closed on August 12th. But other counties, for example, like San Francisco, they haven't even started yet. And then Santa Clara County, they started way back, right? So if your business is in Alameda County, then what you need to do is to go to the county authorized entity to apply, and it still will be online too. But the thing is that if you already received the California Small Business Grant in the past, then you won't be eligible. So I think that's the key. If you got PPP or EIDL or you received any city grant, it's okay. That's no problem.
So I have a question. So I'm aware of the California COVID relief grant, but this micro one, I haven't seen anything of it, and we're the Chamber of Commerce. So like how, if we're not seeing that this is available, how do other people see that it's available?
That's the Alameda County one, right?
Yeah, Alameda County.
The reason is that.
No, I'm talking about
General.
is the micro COVID relief grant California or is
Yes,
it
California.
Alameda
It's
County?
California.
That's California.
So it's a state-funded program, and then they distribute the fund to the county.
Okay.
And then if each county, they're responsible to do the outreach and then and then all the application process, right?
And they told us, the county has told us that they are this close. In fact, we were hoping the border would be able to waive the information grant, but they did not give it to us this week. But they're hoping to basically get it done. They're hoping to do it this week. I guess it's next week that you and I and everybody else who helps small businesses will get the word in.
Okay, good. So we're not crazy.
You're not
behind.
You are not behind.
Okay, I was like, wait a minute.
I actually got calls all the time, right, from other, from small business, because we even though we are taking this as a slave, and we actually service, we don't like turn anybody away. I mean, you are in Los Angeles, you contact us, we'll help you if we can. And so in fact, like Riverside County and Los Angeles County and San Diego, they started like more than a month ago, right? So then I started getting calls from San Francisco or people from Oakland. What happened? I said, I don't have any information because unless the county start, right?
Yeah. Well, luckily the money is divvied up.
Yeah,
It's not all used up in the counties that got their act together before Alameda County.
Right.
Right. So let's go ahead, Veronica.
And I have a quick question for Porter, and is every county will disperse the same amount, or will be different?
No, it's the same amount, 2,500. Now, there's a slight, there may be a slight variation in terms of the eligibility and requirement. So the state basically set the overall, criteria, right? But then there's a little wiggle room for for counties to actually adjust. For example, right? So some counties, they might require that, even though the gross receipt, you don't exceed 5,000, like 50,000 for 2019, and then in 2020, they will require that, okay, because you need to demonstrate because of the impact, the negative impact of COVID, then you have a minimum lost income of 10%, for example. Okay, so some counties might have that requirement. Some counties may say 10%, some may be 15%, or some actually don't have that requirement at all. So I would say, if you look at the application form, 90% will be the same, but there will be still a little bit like variation here and there.
Well, we're gonna get that out to all of you guys as soon as we get the information out, how you guys can take advantage of it, for sure. So, so I have a question for you specifically, Porter, okay? So would you talk about specialized types of financing available for import, export, and funding for those winning a big government contract?
Okay, so for import export, actually there's like two government agencies we can go and get help. One is like from the federal government, which is the XM Bank, it's the export import bank. So what they do mainly two things. One is the export credit insurance. So basically you can buy insurance to insure up to 95% of your invoice, of your sales. So in case, because this is like talking about export. So when you go into a new market, or maybe you never deal with your customer, the client before, so sometimes you might have certain risk in terms of your receivable, whether you can actually get the money. So the export import bank, you can buy insurance to protect that. So that's basically called non-payment protection. And then the other main program is basically provide loan guarantee, right? It's similar to the SBA, but this is like so for example, right? So let's say you try to complete the transaction, and then you have the PO and everything, but you don't have enough cash flow or to get that going, and then you need to go to a commercial bank, and then the bank actually reject your application. So then you can go to the export import bank, and then they will there's a possibility, good possibility that they will give you a loan guarantee. But the thing is that so it got to be number one is like whatever the product you ship overseas has to be shipped from the U.S. You cannot ship something from other countries and to your client. That's number one. Number two is the guarantee is only for the U.S. content, right? So let's say we help we actually help quite a few farmers from Central Valley, like almond exporter, things like that, right? So then they're easily to meet all the requirements because they ship from the U.S. and also of course 100% local, right? If you making some kind of machinery or whatever, then you have parts or components from the overseas or something like that. So that tends to get a little bit tricky, right? I think these are the two things. So you can go to the export-import bank, and typically when you want to apply for a program, you go to the website, and then you can apply, and then they will assign a consultant and work with you and see what your needs are. Because it's pretty wide range. Also, it doesn't actually have upper limit, like how much the invoice size, right? Whether it's like 2 minutes, 3 minutes, 5 minutes, actually there's no limit, right? So each case is different. So that is from the federal government. Now, and then the second one is actually from the state of California. A lot of people doesn't know that state of California actually has I'm sure you two do know, but a lot of audience may not know. They have California has a bank called Infrastructure and Business Development Bank, I think, full name. I always just call them iBank. So basically, they run different loan or grant program, but then they also do the loan guarantee for export also. So you can go to the iBank website and also like connect to they tend to like separate to different region. So NorCal have a NorCal office, so you want to contact the representative over there. And then on the website also a lot of information for different programs. They have a new program from time to time. So that's where you find the information.
So if I'm understanding all of this correct, a lot of the lending that you do and that Penny does is traditional businesses. You've been in business for a certain amount of time. You've got to show, your monies and your income and your expenses and everything. So then, Veronica, is it your company that helps out, like maybe startups, or how exactly does your company work?
Yes, we support businesses in different stages, and mainly we support entrepreneurs that are a startup or they have an initial idea. So in that case, our main work is through the business plan, and then we try to connect entrepreneurs with more sources of resources or capital if they are ready for a loan as well. So in general, when the entrepreneurs are ready for a loan, we try to create a strategy to get funding and connect them with Kiva, that is our main point of contact, or we connect them with other lenders that are available in their areas.
Yes, I think that's important because you always have that new business going, I've got this idea and I want to get it started, but I need money,
Yeah,
right?
we do startups as well.
You do stuff,
Yeah,
okay.
we do startups to the business owner who's been in business forever.
Okay.
They just can't get approved at a traditional bank.
At a traditional bank, okay.
Yeah.
So that's why that business plan is really important, because you
Business plan
basically know,
projections.
it's an idea in your head, but we got to see how it's going to work out
Yeah,
on paper,
yeah,
right?
we need it on paper.
Mhm.
We need it on paper.
So there's also one program from Facebook now with Meta, right? So you guys are aware of that? The fast track, the invoice fast track program, I think is a wonderful program to help, if people have cash flow issue. So basically, they buy your invoice, right? So they only charge you 1%, and then they carry all the risk. And basically, so the first thing you need to do is like to get certified, and also get your company into Meta's fast track invoice fast track program database. So you go to the website, they will list, and also certification that you need to get. And then once you got approved, right? Then you in the database, you approve the vendors, and then so you got an invoice, you send them the invoice. They take 1%, but then you will get the money within 1 or 2 days. So a lot of people, small businesses, they working with government. This is a great program to help you to solve your cash flow problem.
What's the name of it again?
Fast track invoice program. Yeah.
Okay.
So rather than waiting for 30 days, 60 days, 90 days, or maybe 120 days, right? You get it in a day or two.
Is this something only available through
This is
an MBA or through?
Oh, no. This is like a Facebook. It's like now it's Meta, right? So it's Meta's program.
Oh,
So you go
okay,
to
got it.
the
Okay.
Meta
That's what I
website.
thought you said, but then I
Yeah.
was like,
Yeah,
wait a minute,
it's
is
a
that what
Facebook
you
program.
said?
Yeah.
Okay.
Yeah.
Okay, got it. So Veronica, so Kiva with its 0% loans, can you talk a little bit more about that? About what that
Sure.
program is?
Yes, so Kiva, as I said before, is a crowdfunding platform, which means that you are running a campaign, and Kiva is the platform to connect borrowers with lenders. So if you are a small business owner, you create your own profile, considering personal information, business information, and you share your own story and how you started the business and create a profile. So through that profile, people can see your campaign and start to lend you money. So one of the things that is very important either for to start the process with Kiva, because the application is very easy, can take you 45 minutes. And Kiva, you need to run a campaign, so essentially you need to share about your story and things that sometimes people is not willing to share. But in general, Kiva is very simple, the process, and it is, as I said before, is zero interest. Essentially, you need to present information of business, and the maximum is $15,000, and they start with $1,000. So businesses that qualify for the maximum amount in general have more than 1 year in business. They have separate accounts, personal versus business, and they have a good credit score, and in general they have an online presence as well in place. So it is very important to be a very active entrepreneur and business owner if you want to achieve the maximum amount. But in general, the application is very simple because connect you with a lender community. Almost 3 million of lenders are available in Kiva, and the campaigns, especially from Alameda County, on the process between 2 and 3 weeks. So the loan is pure after 3 weeks, but depending on how familiar you are with sharing a campaign or running a campaign, and how involved you are as well sharing more about your business.
So it's kind of based off of a very compelling story as to why you started your business, essentially?
Exactly, yes. And we have very good experience with small business from San Leandro, and you can not imagine how people is connect, and once they start the campaign with Kiva, they start to connect the dots and see how important they are with their business in their own community. So it is a great opportunity also if you want to share more about your business, or if you want to improve your online presence or your number of followers on social media, and besides you have a loan.
Great, thank you for that. Does anybody have any questions out here? Go ahead.
How do you spell Kiva?
It's Kiva. And anybody else? Any other questions, clarifying questions? No? Okay. I've got a couple of bonus questions written down. Let me do a time check. We're at 5:36, maybe 5 more minutes? We'll go 5 more minutes? Okay. Is there a favorite source of funding outside of loans, such as, crowdsourcing or equity partners or anything like that? Do any of you have a favorite source outside of loans? Anything you would recommend?
Investment lending is becoming very popular. Our sister affiliate, Capital Impact Partners, is based right up the road here in Oakland. We recently added that. And it's investment, basically it's a team of investors, and it's kind of the same thing. You're pitching your idea, not your idea most of the time. The business is already past R&D, so they're not looking at the startups, but if it focuses on healthcare, assisted living, charter schools, and co-ops, anything like that, that improves the community, low-income housing, the investment funding team will actually listen to you, read your business plan, which again, we're focusing on business plan and projections, real important. So investment funding's become a lot more popular over the past few years.
Yeah, so I have Okay, so I have like two programs to add. So I haven't, so there's a California Dream Fund program. Now the thing is that, so it's another California, state of California program. Basically, small business can apply up to $10,000 for startup fund in a way. So the business needs to be established and start after 2019, July 1st. Now, again, it's kind of like similar to the micro, business grant I mentioned earlier. So the state is actually asked 17 different technical assistance centers, to help administrate and also process this grant. And they also have a slightly different timetable, like the application window, where it's open and when it's closed. In our case, like for MBDA, we just closed it last Saturday, right? So if you guys are interested in that program, so basically, okay, the program is like the state of California asked you to go through some, very practical business classes, not the typical like university type, but it's like, actually, what's your business structure, right? So how you do accounting and things that are tightly related to small business. And then you go for a training program, and then after you pass the training program, and then you can go apply for the 10K grant. So it basically give you money to take the classes. So what you want to do is like just Google the California Dream Fund, and then you want to check again, I mentioned there's like 17 different, different centers, right? So you want to check like which one is still open, or maybe haven't opened for application yet, right?
So they basically want to know, a little bit about business, how to do a little accounting, business writing or something. They want to know you know how to do that.
Yes.
And then you can apply.
They pay you to go to school.
Okay,